This week on occasion of Vijayadashmi, we are coming up with 3 interesting webinars. The first webinar is Making an Auspicious Start, where we will be discussing on how to make your first investment decision. This webinar will be hosted in 2 different languages, Tamil and English. And the second webinar is What Makes Peer Different. Here we will be discussing our multi-asset PMS product Peer. This webinar is more useful for the investors who want to diversify their portfolio. And the last webinar is The Power of Lump Sum Investing. Here we will be discussing the benefits of lump sum investing. If you are interested in any of this webinar, you can click the link below in the description to register.
Conviction and corrections. Investment conviction tends to grow on us. It also grows with a rising market. As the market rises, as valuations rise, we tend to become more convinced on ideas that we own. Price tends to drive our conviction higher. When price goes higher, our conviction rises. What I've just said is practically what happens in the minds of most investors. When you see a stock that you have bought increase in value, you start believing that you did the right thing, and you also start believing more in what you already did. The investment was made at a lower valuation, but your conviction is higher only at the higher valuation. And as the valuation keeps going up, your conviction seems to grow faster than the growth in valuations. This is again a very normal thing in the mind of every investor. When conviction is running high, you will also notice that valuations are probably higher than they ought to be. Rarely do we see such conviction when valuations are at the rock bottom. In fact, even where valuations are running very high and there is no sign of a correction in stock prices, the conviction is at a peak. But from that peak, if stock price falls 20%, the conviction suddenly looks shaky. That's what corrections can do to conviction. We have seen a correction in the last few days, and we are also seeing that investors are developing self-doubt. They are not sure about most of their latest ideas. This usually affects recent ideas more than ideas you have been owning for years together. In a recent idea, you have probably built your conviction too fast, and you have probably built your conviction when the stock price went up without a correction. If both these things happen in the process of conviction building, such conviction will always be tested in a correction. The current correction has not been such a sharp one. It's a very modest correction, but the conviction has got rattled. A lot of people, especially in illiquid stocks, are now not willing to buy those stocks. In fact, they are slowly wondering whether they should sell some of the stocks which they refused to sell a few weeks ago. If this conviction is so tenuous and weak, then what can a further correction do to it? That's the question that we have to ask ourselves right now. Assume that these stocks which you already own, where your conviction is now shaky, see a further correction in stock price of 15-20%. At that point, what would be your mindset? Very few people are likely to go and buy those stocks or evaluate whether those stocks are giving opportunities to dip into them at reasonable valuations. Instead, if there is a further correction of 15 or 20% in a stock, people will blindly defer even the evaluation of the merit of the stock and wait for the direction to reverse and for the stock to go up. This again shows how conviction can turn during corrections. This market is probably likely to correct far more than we expect it to. After all, it went up far more than we anticipated it to. After all, it went up far more than we anticipated. Our anticipation or prediction is never going to be right. We know it. If we are going to build our conviction based on how our anticipation plays out, we'll probably miss out on the basic building blocks of conviction. Our conviction building itself would be on a weak foundation. My problem with this market is that it has gone up without sharper corrections. The corrections have been shallow or very muted. As a result, our conviction has run way ahead of where it should be. With such elevated conviction, we are setting ourselves up to be tested by corrections. And if the correction is sharp, then it's quite likely that we could get rattled in our conviction. The spaces where we could get rattled are almost always in illiquid parts of the stock market. If you have bought illiquid stocks, whether they are in large cap or mid cap or small cap or micro cap or SME, the effect on our conviction is going to be the same during a correction. Illiquid stocks tend to rise faster and also fall more. So when they rose higher and faster, we built our conviction very easily in them. And when they fall faster and sharper, we are likely to get rattled. We saw a bit of that rattling effect in the recent days when the market fell 3-4 days in a row. But one day of a pullback and the market again tries to regain its confidence. Friends, this is not going to be easy because this is not the usual market. This is a market where geopolitical events, global flows, politics, over ownership of shares, liquidity are all going to combine in ways which we cannot predict to drive conviction and to drive valuations. When valuations go lower, our conviction tends to get rattled or weaker. And when our conviction becomes weaker or rattled, we are going to freeze in our decision making. And when a lot of people freeze in their decision making, valuations will further contract. When a market falls from a peak, this usually happens with a lag after the market has already lost 15-20%. Right now, the larger headline indices have not lost that much. So, we will be able to evaluate the strength of our conviction, the belief of the overall market in equity and its sustainability only when the markets fall further. The current fall is probably a trailer and the big picture will be known during a further correction. Let's hope that we maintain our conviction in the right places, deploy capital in the right companies and travel towards the right results. Thank you for watching this video.